Most people think you need to find a secret penny stock to become a millionaire in the stock market. The reality is that the next wave of millionaires will be made by hiding in plain sight. They will build wealth using massive tech giants and hyper-growth disruptors that are reshaping our daily lives. Right now, a major shift is happening in the stock market. The AI boom is moving out of its first phase and entering a much more profitable second phase. The early money was made on the hardware side, but the real, sustainable wealth is about to be unlocked by companies using AI to generate massive cash flow. If you look closely at the data, the retail investors who get rich over the next few years aren't just buying random hype. They are targeting high-growth companies that are executing massive stock updates, expanding their user bases, and scaling their software infrastructure. Today, we are breaking down the exact layout of this shifting market, exposing a highly anticipated stock split strategy and analyzing 3 specific stocks you can trade right now to supercharge your portfolio. To understand where the million-dollar opportunities are, we first have to look at the massive shift happening inside the AI sector. For the past couple of years, everyone rushed into chip makers and hardware providers. That was phase 1, and it made a lot of people rich. But what most people don't know is that phase 2 is where the multi-bagger returns are hiding. Phase 2 is all about software and practical application. Think of it like the smartphone boom. The people who made the chips made good money. But the companies that built the apps and ecosystems on top of those phones built generational wealth. We are seeing a major rotation right now into companies that embed AI directly into enterprise software and consumer finance. These companies are trading at much more reasonable valuations than the hardware stocks, which means they have way more room to run for everyday investors. Before you skip ahead to the specific stock picks, you need to understand how a specific corporate action can completely change a stock's trajectory. Let's talk about New Holdings, the massive digital banking disruptor backed by Warren Buffett. Rumors and discussions have been building around a massive 4-to-1 stock split for this fintech giant. If you are new to trading, a stock split sounds complicated, but it is actually incredibly simple. Imagine you have a $10 bill. If I swap it for 2 $5 bills, you do not have any more money. The total value is exactly the same. That is a stock split. If New Holdings executes a 4-to-1 split, anyone holding 1 share will suddenly own 4 shares. Concurrently, the price of each individual share will drop to exactly 1/4 of its previous price. The surprising part comes next. Even though a stock split does not change the core value of the company, it almost always acts as a massive psychological trigger for retail traders. When a stock price drops from $40 to $10, it suddenly looks incredibly cheap to the average investor. It becomes accessible to people who do not have thousands of dollars to trade. This massive wave of new retail buying volume frequently drives the share price up right after the split goes live. Beyond the split psychology, New Holdings is fundamentally a monster. They just crossed over 135 million customers across Latin America, and their quarterly revenue recently hit a record $5 billion. They are using advanced AI models to predict credit risk, allowing them to lend money safely where traditional banks fail. For retail traders, buying into a hyper-growth company right before a high-profile stock split is one of the cleanest ways to capture a short-term price surge while holding a long-term winner. This brings us directly to our next major wealth-building candidate, which is SoFi Technologies. SoFi is building the ultimate all-in-one digital banking ecosystem for high earners. The stock has faced some serious short-term pressure, dropping over 30% earlier this year. This drop was driven by temporary capital raises and general market volatility. But smart traders know that short-term panics create long-term millionaires. If you look at the raw operational data, SoFi is absolutely firing on all cylinders. They just set a massive record by adding over 1 million new members in a single quarter. That brings their total user base to nearly 15 million people. What makes SoFi incredibly profitable is what they call their financial productivity loop. When a user signs up for a free checking account, SoFi cross-sells them a credit card, an investing account, or a personal loan. This means their cost to acquire customers drops drastically over time, while the revenue per user skyrockets. Management is currently guiding for an incredible 30% revenue growth for the full year. When a company is growing its user base by 35% year over year, but the stock price is depressed by 30%, you're looking at a classic valuation disconnect. If you want to build true wealth, you buy great businesses when the market is temporarily mispricing them. If you are enjoying this deep, fluff-free breakdown of the market, hit that subscribe button right now so you never miss our daily trading alerts. Now, if you want a stock that mixes massive AI upside with incredibly stable cash flows, you need to look at ServiceNow. ServiceNow is the invisible backbone of the world's biggest corporations. They provide the cloud software that connects different corporate departments, helping companies automate their daily workflows. They boast an unbelievable 97% customer renewal rate. Once a business starts using ServiceNow, they almost never leave. The stock took a massive 33% hit earlier this year because the market panicked over something called the software apocalypse. Investors were terrified that generative AI would replace the need for traditional software licenses. But ServiceNow just completely proved the skeptics wrong. Their recent financial results showed that AI is actually supercharging their business, not destroying it. What most people don't know is that ServiceNow lifted its AI-specific revenue guidance by 50%, pushing it up to $1.5 billion. Corporate clients are happily paying a massive 30% price premium just to get access to ServiceNow's upgraded AI features. The company is projection mapping a path to double its subscription revenue to $30 billion by the end of the decade. Management was so confident that the stock was undervalued during the tech sell-off that they executed a massive $2 billion share buyback. When a company buys back its own stock at this scale, it reduces the total supply of shares, making your remaining shares significantly more valuable. ServiceNow is currently trading at its lowest forward valuation multiplier in years, making it a prime target for individual investors looking to ride the enterprise AI wave. The key to trading these setups is patience and clear execution. You do not need a complex macroeconomic degree to win in this market. You just need to follow the user growth, watch the upcoming stock split timelines, and buy into high-margin software businesses when panic drops the price. Stay safe and see you in the next video.